Now, the cyclical opportunities in Australia are many and varied. Here we're talking about retailers, media, resources, mining services, so you're never short of a cycle to invest in at any one point in time. Right now, we've looked to take advantage of the rising cycle in commodity prices, and that's seen all of the mining services companies see significant improvement in activity levels, and the valuation profile of all those assets has gone from something not so big to something a lot bigger. So we've taken advantage of that. We actually see activity there looking quite wholesome and healthy, and we've maintained our investment levels into that sector. Retail, that's a tough sector. End demand has been impacted by some of the weak macro conditions we've got here in Australia, but at some point we'll be interested in getting back invested in that sector again, because we do know that we've seen changes to interest rates, changes to taxation levels, and we'd expect that at some point that will feed back into a higher activity at the retail level. So, you know, we'd look to get involved in those stocks when the conditions are right and see if we can make some decent returns for investors there. Interesting areas of the cycle for us right now is we can see improving activity in some of the housing related areas of the market. And so what we've been doing is hunting around out there to see if we can find some good ways of getting some exposure there. So we've started investing in Cedar Woods. It's a property stock. It owns a great land bank in Melbourne and in various other states. It's got good diversification of end markets, and most importantly, it's got a cheap valuation. So what we're looking for is good quality assets, cheap valuation, and perhaps that housing cycle, which has been in decline for a while, might turn, and we think that area of the market is looking a lot better now than it was.